Welcome to our in-depth technical analysis of UETA Digital Holding, ticker YDKG, a penny stock that has recently experienced one of the most dramatic declines on Nasdaq. Over the past 3 months, YDKG has plummeted from around $3.50 to just 0.032, marking a catastrophic loss for investors and raising serious questions about its future. In this video, we'll break down the technical signals, volume patterns, volatility, and what these mean for traders and investors. Let's start by setting the stage with a quick overview of the recent price action and the extreme volatility that has gripped this stock. YDKG's price collapse began in September when it was trading steadily between $3 and $4 on relatively low volume. However, by mid-October, a sudden crash sent the stock spiraling down to 0.191, with trading volume exploding to over 82 million shares. The downward momentum didn't stop there. By November, the price had dipped below 10 cents, and on November 10, it hit a new low of 0.029 on a staggering 327 million shares traded. This timeline highlights not just a loss in value, but also the intense volatility and panic that can grip penny stocks during a crash. One of the most striking features of YDKG's recent trading is its volatility. The NATR14, a normalized volatility indicator, stands at an astronomical 603.74%. This level of volatility is rarely seen outside of penny stock crashes and signals that price swings are not just large, they're extreme. The Bollinger Bands, which measure price dispersion, are also highly distorted, with an upper band at and a lower band at Dulk Zara 451 due to the crash. Such wild volatility makes trading YDKG extremely risky, as prices can swing dramatically in either direction within minutes. Technical analysis of YDKG's moving averages paints a strongly bearish picture. The short-term simple moving averages, SMA5 and SMA10, are both well above the current price, with the stock trading 33% to 37% below these levels. The longer-term averages, such as SMA50 and SMA200, are even more distant, with YDKG trading nearly 99% below these benchmarks. Exponential moving averages, EMAs, and advanced averages like TEMA and COMMA also confirm the downtrend, showing the price far below their respective values. This alignment of moving averages is a classic sign of a persistent and powerful downtrend. Looking at trend indicators, the story remains bleak. The average directional index, ADX14, is at 45.78, confirming a strong trend. Unfortunately, it's a strong downtrend. The directional index, DX14, and the Arun oscillator both reinforce bearish dominance, with sellers overwhelming buyers. Trend strength score is a weak 0.12, and the trend quality index is just 32.45, reflecting the poor quality and reliability of any upward moves. These metrics suggest that, despite occasional rebounds, the overall trend is firmly downward and likely to persist unless a major catalyst appears. To understand the current technical setup, it's important to look back at the historical crash events. In September, YDKG was relatively stable, but a sudden event in mid-October triggered a massive sell-off, with the price dropping from $3.52 to 0.191 in a single day. This was accompanied by a surge in trading volume, suggesting panic selling or a major negative catalyst. Since then, the stock has struggled to recover, consolidating in the 4 cents to 6 cents range before another sharp dip in November. These events have left YDKG just 3.45% above its 52-week low and a staggering 99.2% below its high. Momentum indicators for YDKG are almost universally negative. The MACD, a key momentum gauge, is deeply bearish, though the positive histogram hints at possible bottoming. The relative strength index, RSI, is at 20.84, well below the oversold threshold of 30, and the stochastic oscillator is also in deeply oversold territory. Other momentum metrics, such as the rate of change ROC and price oscillator PPO, confirm the sharp decline. While these oversold readings sometimes precede a short-term rebound, the overall momentum remains negative, and any bounce is likely to be short-lived unless supported by positive news. Oscillators like the RSI and stochastic are flashing deeply oversold signals. RSI values below 30, and especially below 25, often indicate that a stock is due for a technical rebound, at least in the short term. However, in the case of YDKG, these oversold readings are accompanied by persistent negative momentum and high volatility, which means that any bounce could be weak or quickly reversed. Traders should be cautious, as oversold does not always mean undervalued, especially in the context of a penny stock crash. Despite the oversold signals, YDKG's momentum remains negative across multiple timeframes. The Momentum 10 and Momentum 20 indicators are both negative, and the rate of change ROC is sharply down at -42.86%. The price oscillator PPO and TRX10 are also deep in negative territory. This persistent negative momentum suggests that sellers are still in control, and the risk of further declines remains high. For traders, this means that any attempt to catch a rebound should be approached with extreme caution and tight risk controls. YDKG's volatility is truly off the charts. The average true range, ATR14, is 0.196, which is massive compared to the current price. The NATR14, which normalizes volatility, is over 600%, indicating that price swings are not just large, they're extreme. The Bollinger Band width is also at record levels, reflecting the wild price action. Such volatility is typical of penny stocks in crisis and means that prices can move rapidly in either direction, making risk management absolutely critical for anyone trading YDKG. Linear regression analysis of YDKG's price action shows a negative slope of -0.045, confirming the persistent downtrend. The R-squared value is just 0.28, indicating a weak fit and high unpredictability. The predicted price from this model is 0.041, which is about 22% above the current price, suggesting that the stock may be undervalued in the short term. However, this undervaluation must be weighed against the extreme volatility and risk of further declines. Risk-reward profile for YDKG is extremely unfavorable. The risk-reward ratio is just 0.12, indicating high risk for very little potential reward. The stock's beta is 1.45, meaning it's much more volatile than the overall market. The ease of movement EOM indicator is negative, showing that price declines are happening with relatively little resistance. For most investors, this combination of high risk and low reward is a clear red flag. Volume analysis reveals a complex picture. On balance, volume OBV is positive at 1.091 billion, suggesting some accumulation even as the price falls. The money flow index MFI14 is bullish at 71.83, but the accumulation distribution AD line is negative, indicating ongoing selling pressure. The Chaikin oscillator is also negative. These mixed signals suggest that while some buyers are stepping in, the overall trend is still dominated by sellers, especially during high-volume crash days. Volume weighted average price VWP for YDKG is 0.14, which is 77% above the current price. This indicates that most recent buyers are underwater and there's heavy selling pressure. Volume ratios and growth rates are elevated, with trading activity spiking on crash days. The dollar volume remains modest for a penny stock, but the sheer number of shares traded during sell-offs is a sign of capitulation and panic among investors. Support and resistance levels for YDKG are tightly clustered due to the low price. The main pivot point is at 0.033, with support at 0.029 and resistance at 0.038. These levels are critical for short-term traders, as a break below support could trigger new lows, while a move above resistance might spark a short-lived rebound. However, given the volatility, these levels can be breached quickly, so traders must be vigilant. YDKG's 20-day correlation with the broader market is 0.78, indicating a moderate relationship. This means that while the stock is heavily influenced by its own events and volatility, it still tends to move somewhat in line with overall market trends. However, the extreme price swings and unique risk factors of YDKG make it much more unpredictable than most stocks, so broader market moves are only one piece of the puzzle. Daily return for YDKG is a staggering -36%, reflecting the sharp drop in price. The cumulative RSI is extremely elevated at 1,456.78, which is a sign of persistent oversold conditions. These metrics underscore just how extreme the recent price action has been and highlight the risks of trying to time a bottom in such a volatile environment. YDKG's overall technical score is just 25%, which is considered strongly bearish. This low score reflects the combination of negative trends, high volatility, and weak support levels. For most investors, such a low technical score is a clear warning to stay away unless they're highly experienced and willing to accept significant risk. If YDKG breaks below its key support at 0.029, the bearish scenario could see the stock hitting new lows, possibly down to 0.02 or even facing a trading halt. The combination of high volatility, negative momentum, and weak support means that further declines are a real possibility. Traders should be prepared for rapid moves and consider using stop-loss orders to manage risk. Those considering speculative trading, the recommendation is clear. Only risk a very small portion of your portfolio, ideally less than 1%. If entering a position, look for a rebound above 0.038 and use a tight stop-loss at 0.029 to limit potential losses. Monitor for any news or filings that could act as a catalyst, but remember that penny stocks are often subject to manipulation and sudden moves. Conclusion: YDKG is a textbook example of a penny stock crash, with extreme volatility, deeply negative technicals, and high risk of further downside or even delisting. While oversold signals may tempt some traders to try for a quick rebound, the risks are substantial. Always review the company's fundamentals, consult with a financial advisor, and remember that technical analysis is just one piece of the puzzle. In markets like this, caution is your best ally.